Given ebullient traders in the US market have bid up most investments to fair levels, we decided to scour the planet for better markets. We went to where the competition was low, to one of the cheapest markets in the world with a CAPE ratio of under 10 times. And we traveled to one that's among the who's who of respected capital markets. After arriving in Italy, we found some really neat situations, one of which reminds us a lot of fiat. Our fiat investment has already more than doubled, and we think it still has legs going into an eventful 2015. But we think Finmeccanica is another Italian job that's similar in 7 major ways. First, it has a fantastic CEO. Second, some high-quality businesses are being masked by weaklings, many of which will be sold or restructured. The company has neutral to positive end markets, yet is cheaper than the cheapest competitor. Thus, current fair value is nearly triple the stock price. But before we talk valuation, meet the new pilot who did a fantastic job turning around Trenitalia.
I am very clear that it's a company that needs to move more aggressively to deliver sustainable profitability and cash to its shareholders. It's absolutely our need to have the confidence of our shareholders. It is my challenge to deliver that, and I accepted this role because I don't usually accept challenges that I am not able to manage.
They're at their best when they make a ton of these!
Augusta Westland is the most profitable crown jewel of the group, worth nearly €12 per share at peers valuations. Yet it beats all of these competitors by being the most profitable helicopter manufacturer.
They make a lot of parts for this.
Its aeronautics division has respected segments despite a high-profile delay on the Dreamliner's fuselage. It's worth over €5 per share as a division. Somewhat related are defense systems and electronics, which make everything from flight control systems to missiles. It's the biggest revenue contributor to the group, and it's worth nearly €10 per share.
They even make better versions of these, but not for long.
The train manufacturing divisions are loss-making and will soon be sold to either Hitachi or a Chinese joint venture, and media rumors suggest a $1.45 billion valuation or $2.51 per share.
They build power plants? That sounds like Aerospace.
Fata will also be sold, and it is not very material to the group.
Then make those bad boys.
Neither is the bus-making operation, which has recently sold to a Chinese manufacturer despite heavy union protests. And finally, Finmeccanica's space operations recently supplied major portions of the high-profile Rosetta probe that landed on a comet. At peers valuations, the space division is worth almost €2 per share. To briefly review, here are all major divisions of Finmeccanica and their per share valuations. If we subtract the capitalized corporate overhead costs, we get a sum of the parts valuation that's nearly triple today's stock price. And that's before Moretti's restructuring plan, which is due to be unveiled in late January or early February. Also, the 2 restructuring initiatives that have been launched have yet to cycle through the financials, so we think there are risks to the upside on this valuation. As Moretti converges the group's R&D spending to similar levels than Finmeccanica's peers, he has over $1 billion opportunity to improve free cash flow. Capitalizing this at 10 times, it would translate into enough room for another triple on the stock should he cut R&D meaningfully. We've got our carry-on stowed, our seatbelts fastened, and we anticipate takeoff any day now.